And we've got Scott Bauer, he's the CEO of Prospect Trading Academy, joining us to take a look and to continue that discussion on banks. Scott, they're on the move. Welcome to the show. I saw JP Morgan, a new high yesterday. What's the story with them today?
You know, pretty flat today. Looks like some profit taking. And, I think that they may have gotten a little bit ahead of themselves. I was really bullish. I've actually been on your show, on Oliver's show, talking specifically about JP and some of the other big ones. And I love them. I loved them a couple weeks ago going into earnings. I think they're a little top heavy right here. So if you've been in along the ride here, I'd look to take some profits here. If you're not in, to me, I would wait for a little bit of a pullback, not necessarily to where some of these stocks were 2-3 weeks ago, but maybe just a 2-3% pullback. But you know what? You gotta like what you see here, Ben, because even in some of the banks with poor trading revenues, a la Bank America, who had overall good earnings but bad trading revs, Goldman bad trading revs, the other big money center banks, they withstood this massive challenge of the interest rate yield inversion and of falling rates. So you got to like them.
Scott, I do like what I see. You're right in terms of that move higher up to 121.59 this week, but in terms of the bulls, I can't imagine they'd like what they see. In fact, in the sense that we didn't get any real follow through. 2 days now of just kind of, as you mentioned, somewhat flat. This is the kind of move you'd like to see some real energy, some follow through, some conviction, some participation here, volume, and they actually had a nice run up into it from around 110 up to that 121 level. But I see what you're talking about, potential for a pullback here, because it looks like if they get back in that range, we could see them back down to the 105 area. That's the range they've been in roughly, well, if you go back to like the middle of April until that recent run-up that we saw. But I also like them because if you take a look here, they're really doing well compared to like Bank of America, and also we've got Morgan Stanley, and I've got them all three here that our viewers can see right now. JP Morgan's the only one that posted a new high there.
No doubt about it. And that's why I think maybe it got a little bit of ahead of itself.
Okay. Gotcha.
I still love it overall. If I had a 9-month or 18-month timeline on it, no reason not to hold it. But, as traders, our timelines are more like, a minute, a day, a week, that sort of thing. So I would absolutely look for a little bit of a pullback before getting back in.
Yeah, were you surprised not to see too much enthusiasm, or at least not enough to get a new high in Bank of America? Because we just showed some of the year-over-year numbers, and they actually look pretty good.
They were pretty good. Again, there, some trading revs not so great, but year over year it was really good. And I think it's just the overall caution in the market still with rates here. But to me, you look at these banks who have, again, withstood the massive challenge of balancing and kind of reinventing some profit centers with rates the way they've been. You got to like it.
How about the fact that these stocks have been running it up here for the last few days? Scott, let's talk Morgan Stanley. Is this a situation where rising tide lifts all boats, so to say, because they're lagging a little bit still?
They are. They still had pretty decent numbers. The stock moved nicely today, but they have been a laggard. But out of all of them there, I see some big technical resistance here in Morgan. The other ones, it's not so much of a technical area to sell as just maybe they got a little bit too far over their skis. Morgan, though, I'm a little concerned about Morgan, and I'd stay away from that one.
Yeah, Morgan Stanley's been struggling a bit. I said here that they've been lagging. They're actually the leader today in terms of percentage-wise on the intraday, but currently lagging on the bigger picture here. Scott, let's move on here, though, because we got some earnings previews to take a look at here as well. You wanted to highlight KSU. Talk to us about what we're seeing there.
You look at these charts, and even without some of the other transport results that we just got out of UNP and CSX, you have to like this, even though, it's a sector that has been kind of beaten up. And I really look for a good report here, Ben, and I think it's going to be a clean sweep. The brooms are coming out. When you look at the rails between CSX, UNP, and KSU here, I like it a lot. Stocks 136. The option market is pricing in a move of about $4.50 or so. So about, a 3.5% move either way. I like it to the upside. They did just get upgraded. I think it was either earlier this week or last week with a target price of 151. I don't see us getting there right now, but I do see 140 in the cards.
Noted, $15 above where they're trading right now, around 136. But this is a new high. This is great timing for the bulls if they can match it with some good numbers here today. We're going to keep a close eye on Kansas City Southern. Scott, I can see why you you've got your eye on them as we head into the numbers here today, up on the day by about 0.75%, but into a new high today. That's impressive. Let's talk about the fact that we've had crude for the most part. I can't believe, Scott, how much it's been sideways, limited in terms of real directional conviction. We got a late day rally today, but for the most part, the last few days, it's been just muted. Let's talk about Schlumberger. Let's talk about SLB and what you're seeing there.
I'm not sure the right word to sum this one up. I mean, it's pretty bad. You look at this, they're the world's largest oil service provider. They've been in a slump, seems like forever.
Yeah.
You look and see this downturn that they've been in. It's been 4 or 5 years here. So the option market doesn't price in a real big move. It's only about $1.30 or so, but coming off $32 or so where it's at here, it has actually dipped not just below the 200-day moving average, but now below the 50-day moving average as well, Ben. It continues to make lower highs, lower lows. Hard to be real positive about this one going into earnings.
Yeah, recently down to 30.65 this week. We're looking for earnings per share to come in at 40 cents. It looks like revenue is expected at $8.53 billion. Scott, if we were to get a breakout here below this 30.65 level, I mean, this is the exact same thing like we were just talking about with Morgan. We'd be looking for a breakout with some energy, with some participation. We're going to keep a close eye on SLB, Scott, and appreciate you joining us here on Midday Movers. Traders, that's Scott Bauer, the CEO of Prosper Trading Academy. We're going to take a quick break, but